SoFi selling off yet again today, guys, as a Morgan Stanley analyst lowered his price target and put a strong sell rating on the stock yesterday. So we have to break that down in this video and, of course, break down the charts, what I'm looking to do, where I'm planning on buying more, as again the stock is selling off. It's currently down about 11 cents. It was 7 cents a couple of seconds ago, feels like, at least, and now it's down 12 cents. It's at $7.71, down 1.5% in the midst of an overall green day for the stock market. So we're going to break down SoFi, this article, talk about what's going on with this analyst for Morgan Stanley, and then later, if we have time, we'll break down the indexes. So hit that like button, guys. Make sure to subscribe. You might as well follow me on X and on TikTok as well at Stocks Talk Stocks. That's linked down below, guys. And with that being said, cheers. Let's dive right into the video. So again, SoFi's been selling off, you guys know, at this point for the past couple of days, ever since the company reported earnings. Well, essentially what happened is the company shot up a ton after earnings, and we've been selling off ever since. We're still actually up a little bit from where the company was before the earnings, but pretty much, guys, let's be honest, we can see it right here. The entire gain has now been lost, and we're seeing the analysts play games again, guys, with the sell ratings. We see it on the buy rating side as well, the adjustment of the price targets. I wouldn't be surprised, honestly, if Morgan Stanley, I don't know about that analyst, but if they were buying SoFi stock on this downside. It's funny how the game works sometimes, but we're not going to get into that in this video. Either way, SoFi shot up 25% post earnings. Now we're pretty much down from the peak about 19%, as you guys can see, from 945 to about 770. So let's break down what's going on with this analyst. Let me pull it up here. Bear with me, guys. So like I said, a Morgan Stanley analyst here, you guys can see, downgraded SoFi Technologies to a strong sell on revenue growth concerns, which, by the way, they just grew revenue by about, 30%, give or take a couple points there. But yeah, they did pretty well this quarter that they just reported. Let me actually zoom in a little bit here. I'll make my big old head a little bit smaller. There we go, guys. So we can see here Morgan Stanley's Jeffrey Adelson downgraded their rating on SoFi Technologies from hold to strong sell. I mean, geez, from hold to strong sell. That's such a big change in sentiment after an earnings report that was pretty good. I don't know why, but hey, they did that on the 31st of January, which was yesterday. Happy February, by the way, guys. The analysts also lowered their price target by 7.1% from $7 to $6.50 per share. So a little drop there in price target. All right, 7%. All right, fine. Adelson's decision to downgrade SoFi comes after a careful review of the company's Q4 and full year 23 report, which was released on January 29th. According to the analyst, management's new medium-term targets, quote, may be too optimistic. Adelson expressed concern that SoFi's revenue growth will significantly slow down in 2024, primarily due to growing lending pressure. And I get that. I could see that, happening a little bit. I don't know about significantly. What does that mean? Maybe 10% revenue growth, 15%. I don't know if that's necessarily going to happen, but could it go down maybe to 20%? Okay, I can see that. Potentially, again, due to growing lending pressure. So I could potentially see that, but still, I mean, I don't know if I'm fully on board with that. We can see here, looking ahead, the analyst believes that slowing sales and execution risk will continue to pose challenges to the achievement of management's 2026 targets, and Adelson concluded their note by stating that these challenges should be taken into consideration when assessing the company's future prospects. SoFi Technologies reported impressive results, which you guys, you know that at this point. We've covered that. Earnings per share of 2 cents. They beat the estimate. And, they grew revenue pretty nicely here. It looks like SoFi's revenue grew 34%. So, Okay, so what does significantly, again, going back to that, what does significantly slow down mean in terms of Adelson's perspective here for revenue growth? They didn't actually give a target on that. I mean, sure, it might not be 34%, but 25%, 30%, 28%, whatever it ends up being, that's still pretty good, right? And for the full year, SoFi Technologies achieved remarkable revenue growth. The company reported revenue of $2.07 billion, surpassing the previous year's revenue of 1.54 billion by 34%. That's pretty good right there. Essentially what they're saying is things might slow down, which they might, but, to put a strong sell on the stock, guys, that's a little bit much. In my opinion, I don't know about that. And you can see here, management provided guidance for Q1, projecting revenue in the range of 550 to 560 million. And they also projected GAAP net income of 10 million to 20 million and adjusted EBITDA of 110 to 120, which you guys already know. We covered this. And for the full year of, full year of 24, SoFi Technologies anticipates GAAP EPS of 7 to 8 cents. Pretty good. If they come in at 10 cents or more, that's going to be, of course, even better. So, yeah, man, Jeffrey Adelson, what do you guys think from Morgan Stanley? Do you think this position has or holds any weight? Do you agree? Do you disagree? Let me know in the comments. As always, guys, I'd love to know. Let's see here really quickly, guys, about Jeffrey Adelson here. It looks like the Morgan Stanley analyst responsible for the downgrade has a strong track record in the financial services sector. He probably has puts on SoFi as well. Ranked in the top 37 out of 4,400 Wall Street analysts by Wall Street Zen. Adelson has an average return of 5.8%. and a 50% win rate. Okay, their expertise is in the field, yada, 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 blah, blah, blah. Either way, guys, I don't give a crap. That's the reality. I don't really care what these analysts say, in terms of, stocks that I own, obviously stocks that I don't own. But what I'm trying to say is you got to take these analysts' opinion with a grain of salt. And I'm not going to go crazy based on what an analyst is saying on the bullish side or the bearish side. Even if let's say an analyst came out today and let's say this guy Adelson said, okay, I'm going to put a buy rating on SoFi and a $20 price target. Does that mean I'm going to go and put my entire life savings on SoFi tomorrow? Absolutely not, guys. We got to take these things with a grain of salt. But yeah, I mean, one person, Morgan Stanley analyst, downgraded them. All right, whoop-de-doo. Does that matter in the grand scheme of things? No, but it is interesting to take a look at. And we'll see, man. At this point, SoFi, again, like I said, is back to where it was when the earnings came out. And I'm probably going to buy more. Well, I'm definitely going to buy more if it breaks down here. If it starts going sub 7, I'm going to be adding more. In the mid 6 range, low 6 range, I'll be buying more. And when will I stop adding to the position? Maybe in the $5, $5.50, $6 range. If it does get down there, I'll probably have it built out by then. And I'll just hold. I'll just hold for the long term and kind of ride it out, maybe trade it a little bit, do some option strategy. But yeah, either way, SoFi it's down a bit right now, continuing the losses. Again, in the midst of a green day where we have the Russell up 0.5%. Looks like that's recovering a bit here. We're up a little bit, 0.5%, not bad. Triple Q's up 0.8%. Looks like we are getting a little bit of consolidation at the 180 SMA on the 4-hour chart. All right, kudos to the the NASDAQ. And we can see SPY, which is the S&P 500. That's up around 0.9%, looking good. Bouncing off the 180 SMA as well. And the Dow Jones is up 0.6, 0.7. Also looking to maybe go back to all-time highs, which we're about $200-300 or points rather away from, as we just hit the all-time high yesterday at 38,588. Now we're at 38,400, so we're less than 200 points away for the Dow. So what do you guys think? Let me know your thoughts in the comments on SoFi, the analyst, the markets. Drop some comments, hit that like button. Feel free to subscribe. We're trying to get to 50,000 subs this year on YouTube. You might as well follow me on TikTok and what's the other one? X, that's right, X, at Stocks Talk Stocks. And if you have not gotten your free stocks yet for Moomoo, use that link down below. Once you open up your account and fund it with at least $100, you get 5 stocks, and fund it with at least $1,000, you get 10 more stocks, totaling 15 stocks, each of which could be valued up to $2,000, guys. So get on it. Use that Moomoo link down below. And with that being said, guys, cheers. I'll catch you all in the next video.